Welcome back to Planet Podcast. This video is going to be about the SPY, the S&P 500 ETF. And if you'd like to learn more about investing and get started on investing, you can check out the links below. You can trade SPY on many platforms: Robinhood, Webull, TD Ameritrade, E-Trade. Most of them do allow you to trade the SPY. So we're going to talk about what is the SPY and how should you go about trading it. Where does it go? Should you be a long investor or a short investor? Should you day trade it? All of those things we're going to talk about in this particular video. And first I want to click over here just so we can have an understanding the SPY ETF. The SPY is an exchange-traded fund that tracks the S&P 500 index. It is often regarded as the first ETF to be listed and remains one of the most actively traded even with the advent of competing S&P 500 ETFs. Right, so what that means is it's all of the stocks in the S&P 500, but it's traded as a fund, right? And this one, it happens to be valued at 10% of the overall indice. So if the S&P 500 is trading at 4,000, the SPY is trading around $400 per share, give or take a couple bucks there. So we're going to talk about trading it because you'll see a lot of videos on YouTube and a lot of traders that do trade the SPY, right? And we follow it and we chart it daily. If you watch this channel throughout the stock trade days that I do live stream, you'll see a lot of people trade SPY. SPY overall, let me pull this up here on our overall update. Overall, SPY has given an average of 10% return on investment year over year. Now, does that mean that if you had bought in last year that you're doing well this year? Not so much. But if you hold out, eventually the S&P does recover because over the course of the companies that are in with the S&P, they usually go up in value and therefore brings the SPY up. So the SPY's number here is a average price of all of those stocks and equities and all of their weight divided by each other gives you roundabouts the S&P 500 index as to what they overall trade in. So if you're going to trade the S&P or be a long investor, historically, it has been a good investment to invest long in the S&P 500 or the SPY or the SPX index, right? Because overall, it does go up. Now, we do see big pullbacks. So we do see pullbacks way back here in previous years, like 2008. Obviously, there was the big market crash, and then we had a big run up, and we've always had these pullbacks. This right here represents COVID, and this right here kind of represents the Biden administration. However, what do we see happen? We do see bounces and recoveries, and are we at the bottom? All of these things are relevant to what's happening in the real world. So how should you trade the SPY and how do I trade the SPY? And maybe this will help you guys understand a little bit of what we do on the daily basis, because if we want to go back and just start off with a daily and try to read a daily chart, we would argue that the S&P is in a daily downtrend of resistance, right? And we broke above it a few times and back below it and bounced. And if we want to look at a daily chart, we would guesstimate based on market data that we are going to continue a downtrend. However, if the market does have some slight recovery, we could see this thing bounce off of this, turn this resistance into a support, and see it climb back up. We won't know until we have the data to support the move, right? So we can look back here historically and think, well, we have the data. We were in a downtrend move. Let's just clear this line for you. Put one in here. This downtrend was broken to the upside. We saw, then we see it come back and we're retesting and we're creating a new line as new data develops in the market, right? So when I trade the SPY on a daily intraday level, and we look for moves like we see happening here, right? We see all of this movement on the last trade day, which would have been August 5th. This was the trade day that opened. Now, when I'm making day trades on SPY and ultimately SPX, that'll be another video here, and we're day trading options. We're not day trading equity. And you can day trade equity just all the same. But I am an options trader by nature, so that is what I am watching. What I have pulled up here when I'm day trading is I have the S&P 500 index, the SPY. We also have some other information that moves the market. And what I am referring to are the top holdings in the S&P 500. So what makes up the S&P? We have information technology at 26.8%, healthcare at 15%, finances at 10%, consumer discretionary at 10%, and communication services 8.9%. And if you're good at math, you'll know that that does not all add up to 100% because there are a couple other things that aren't even mentioned. However, on the intraday level, These are the stocks that matter. If you're watching SPY and you're trying to trade SPY and you're trying to be a day trader, these are the ones that move the SPY. We have Apple coming at 6.6% portfolio weight as of June 30th, 2022. So, as of a month ago. We have Microsoft at 6%, Amazon at almost 3%, Alphabet, Class A and Class C stocks together make up 4%. Tesla Motors at 1.8, Berkshire Hathaway Class B at 1.6, United Healthcare, Johnson & Johnson, and NVIDIA. These are the top 10 that make up what we can see as the SPY, right? Now that is kind of a big deal. So throughout the day, what I have pulled up on my charts here, and I'm using Webull. If you're not familiar with Webull, we can do some videos about that as well. I will have Apple, I will have Microsoft, I will have Amazon, I will have Google, I will have all of these stocks. We're going to put them all on the same chart right here for the intraday pulled up, right? And I'll be watching them for entries and exits. Now, what I like to do is I have my watch list over here made up of stocks that I'm watching. Obviously, if I'm trading SPX or SPY, I would like to know what these things are doing. But if you're looking for a solid entry or confirmation of an entry, you need to watch these stocks, right? You need to watch all of them and see what they are doing, because what they are doing matters, right? If they're all moving in the same forward momentum, then you could say we're being bullish to the upside, and we're going to play our options chain to the upside, and we're going to manage our entries and exits accordingly. Now, what I look for and what I have been doing for the last few weeks has been looking for the outlier. Let's look for the stock amongst these that does not do like the others, right? And on Friday, it was Tesla. Tesla opened up, as you can see, everything opened up with a nice green candle, and Tesla just didn't seem to care, right? Now, why is that? Why is Tesla not moving like the others? We can see Microsoft, Apple, let's pull up Google here. They all moved, the charts moved almost identically. So no matter which stock you were playing, you would have had pretty much the same entries and exits throughout the day, except for Tesla. Now, how does that affect the market? Well, Tesla is almost 2% of the S&P 500. So when Tesla's not moving the same direction, it's going to slow down the overall movement of the ETF or the indices, right? Because Tesla's market cap is almost $1 billion. Is it? Or almost $1 trillion. It's at $902 billion. Now, Apple's market cap at $2.6 trillion. What it does matters. So what I do is I look for these outliers on our daily basis, right? Find the stock that doesn't move like the others, and let's find out why. Because if it doesn't recover, we're going to have overall a sideways sentiment in the market, which is what we ended up having, right? So even though we had a decent move on Apple, Microsoft, Google, even Amazon, Amazon was a little bit more of a downside recovery, but these stocks all look kind of the same. Because Tesla didn't recover, we never saw our continuation of bullish momentum. Now, had we seen that coming off of this candle here, we could have played the S&P a little bit more bullish than we had, and you'd have been better off in a long-term hold. However, if you were day trading SPY on the daily level, this price action right here would absolutely roast your premiums on contracts, right? It'd just do nothing but chop them up if you didn't get a good entry and a good exit. So on the daily level, if you're doing intraday day trading with the S&P or the SPX, and we will go over them a little bit differently because SPX is a little bit more violent, you're going to find this outlier, and we're going to watch that. And so every day that I'm trading, I'm looking for that outlier. And the day before we go into here, we're just going to scroll back, and we're going to scroll back another day, and we can see that the SPY on this day here was really sideways, right? We opened at a level and we closed at a level. We actually opened at 409, and the day's close was let's see, I think it was actually right about the same, like 412, somewhere around there. Relatively sideways for the overall indice, right? And we look at what happened on this day, and we see that while these ran up, Tesla ran down, Apple had a pretty good pullback while Amazon was running upward. And when we have these stocks fighting each other like this, what we end up having is a tug of war. And you'll tend to find that they will actually almost be they'll pick sides, right? Which is kind of interesting. You'll see them kind of pick a side. You'll have two stocks that run together, two stocks, say 2 out of 4 that run one way and 2 out of 4 that run the other way. And while it might look like the charts are similar, in the minute chart or in the 2 or 3 or 4 minute chart, they're actually making opposite moves, which affects SPY in a way where it just ends up chopping sideways. We'll get these kind of big, let's see if we can scroll out here to a day like that, where we get a big red candle followed by a big green candle, but really ultimately the price action didn't move at all. So if you're day trading, that is extremely frustrating to watch. So every day that the market is open, I don't trade the bell. I recommend not trading the bell because we really don't have enough information to gauge where the market is going. Almost every single day, you're going to have a big spike up, a big spike down, and then it's going to pick a direction, right? Now, if you wanted to play on the 1 minute chart and say, oh, well, off market open, we're extremely bullish on SPY, and you can make some decent money if you're in and out quick on a short-term expiration contract. You could actually ride this up pretty well on a day like Friday. If we scroll back to a day like Thursday, you can see, there we go, that we really didn't have a continued momentum throughout the day, right? We had a rather bland opening. You scalp the bottom, you ride this up here. This is 413 to 415, a $2 move on SPY. Immediate sell-off. This price action here would chop your contract all to hell if you were holding calls. If you bought puts at the top and rode them down, this one green candle kind of murders your puts. So I try not to trade until we have an actual confirmation of a trend line. And sometimes that confirmation comes from a move in a stock such as Apple, Amazon, Google, Microsoft, Tesla. If there's any news that comes out related to those stocks, we actually do see price action be affected by it. So on Friday, if we look at Tesla on Friday and why did it sell off? Well, we went into Thursday after hours as having Tesla shareholder meeting on whether or not they're going to vote for the stock split, a 3-to-1 stock split. Now, what the vote does isn't really matter too much because the stock split won't happen for weeks afterwards. However, the stock split vote, everyone is pretty bullish on it, right? So they're expecting the stock to run up. However, Tesla had a giant red day, down like 6.7% on the day. I think it was down over 7% intraday on ultimately no news, right? It really didn't matter what they did the day before because none of it actually affected it. However, the sell-off was pretty eminent. And with that sell-off came some stagnant movement in the S&P. So I do encourage you to pay attention to what all of those are doing if you want to trade SPY. Right? If you want to trade it off the bell, just know that it is a 50-50 coin flip. It is an educated guess based only on price action of the days prior. And sometimes in the market, we really can't bank on that being the positive sentiment move, right? And I'm going to scroll back over one more time and just go over this chart because if we want to play technicals on the S&P, this is what I am looking at as far as price action to the future. We can look at this and say, well, we drew a giant cup on the daily, and after every cup, we need to make a handle if we want to play technical analysis, which means that we will have price action range bound in between, say, 405 and 415 for anywhere from 5 to 9 days, and then the market will make an overall move. Now, this move can be affected by several things, such as earnings, such as news, such as economic news, such as rate hikes, such as FOMC meetings, such as World War III. All of these things can affect it. As you see, the last time we made a cup and handle, we had a rather large sell-off, right? Followed by a slight recovery. Now we're back here making this cup again. And is there any reason to stay bullish to the future? Not really. I do feel like we will see some upward momentum into the holiday season just because people will be going out getting second jobs. There'll be more hiring for the holiday season. There'll be more spending because people are going to be out there buying all kinds of presents and throwing parties and doing all of these things that we normally see throughout the holidays. So the sentiment is that we probably will see an injection of money into the market, but it might not be as much as previous years. But with that, I do encourage everyone to be smart with their investments, to not think that just because it's down, it has to go up. It doesn't have to do anything, right? At the other end of every trade or the other end of every rise in market price or say fall in market price, there's people who are buying and selling these things. It doesn't just go up on its own. There are buyers and sellers. So I hope this video you found somewhat informative. as far as how I do my day trades and how I plan out my days. And now none of it's foolproof, but it does help, and it has helped me in my day trading ventures. So if you'd like to join us on the channel, I do live stream the market throughout the day. I understand that for some of you, it might be rather boring because all you're looking at is stock charts and not somebody here talking your way through it all day. But you can also join the Discord for live callouts and market sentiment and education. So until next time, check out the links below. And as always, this podcast is sponsored by TMF Apparel USA. I'll see you in the next one.